All right, testing, testing, testing. All right. Oh my goodness. What a crazy day, huh? All right, let's see if I can get you some charts. Screen capture, add source. Let me put laptop. Here we go. Hello, hello, hello. How are ya? How's your mum? Is that going to work? I can't quite see what you see. There was a power outage at my home and it's messed up my PC. Yeah. So now I can't log in. So, anyways, and then for some reason I can't log into Forex.Today. So here we are on traders.com. So let me know if anybody shows up. Uh, all right. So I'm trying to get log in so I can see the chat, but I can't chat. Open in web browser. Okay, but then it doesn't open. Oh, there it is. Okay, it did open over there. So let's see. Hola. Yeah, so it works over there. All right, so at least I can move that to my other monitor. I wonder if I can refresh this, a refresh chat. No, it still wants me to sign in. All right, but anyways, I can chat with you if necessary. All right, so hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Can you confirm the sound? Do you have sound? I'm not entirely sure. Uh, yeah, I think you do. Cool. And you should have charts. All right. So this is traders.com or YouTube channel where I'm normally running our free squawk box, but I can't get into Forex.Today. So if you're new to this, I'm using the Traders Way MT4 platform. Unfortunately, my laptop can't webcam's not working because I installed a fancy pants webcam for doing video podcasts, and now it's killed the onboard webcam. So even though I don't have that thing, it's it's still not working. So, anyways, we're pretty close. Here, so we are going to use Trader's Way, and we are going to use TradeRs. So let me get TradeRs up and running. And, Fox Business Gasparino, your agreement in principle on trade with India. Hang on, I was working on my taxes and a bunch of other things. All right, so hopefully this will let me log in. All right, we're good to go. So let's do a news update. Wow, my internet must be slow. I wonder if my router's struggling after the power outage. Oh, that's quite unusual. I haven't seen that before. There we go. Fox Business Gasparino, near agreement in principle on trade with India. U.S. dollar Canadian dollar lower, but holds a 100-hour MA. U.S. dollar slips as stocks dip. Scotiabank. Canadian dollar lags peers as markets ponder U.S. trade policy. Scotiabank. Mixed sentiment in global markets. Cryptocurrency campaigners call for Swiss central bank to hold Bitcoin. Pound sterling resumes upside against U.S. dollar. U.S. durable goods orders beat estimates. Are silver prices set for a breakout? Apple is struggling to ship manufacturing equipment to India from China. Euro, U.S. dollar recovers as U.S. dollar retreats, despite de-escalation in U.S.-China trade war. All right. So there's a little headline update. We can check continuing claims 220. We had that this morning coming out at like 218, I think it was. So 220 is perfectly right. Durable goods 9.2, very volatile, just kind of out of control here. Wow, it's a big number, but it's a volatile number. Look at that. So big durable goods. This will be discounted as companies front running the tariffs. So they're placing big orders before the tariffs hit. So, anyways, so that seems to be that. And I believe in that case, there was no trade, right? So again, we covered this at 7 o'clock this morning. So I don't know, 3 hours ago, we covered all of this at traders.com. Go to the durable goods. It was greater than expected. And in that scenario, there are no scalps. No, I mean, there's a couple, but when you only see like, there's only one scalp on USD yen, but when there's only one scalp on one, on one currency pair, forget it. It's a one-off. So when you go to euro dollar in this situation, when you look at all the past durable goods that were greater than expected, there was no scalp. Yeah, there was never a scalp. Okay. So over the course of 2 days, more often than not, is up. But okay. So the consensus was 2, the actual was 9, positive differential of 7, and in past performance, there was never a scalp. Okay. That's that. This is what's happened in the past. I mean, it's good to have the data, but, you know, is there a reliable, repeatable scalp? No. And that's useful news. I mean, that's really useful news. In this scenario, in the past, there was no reliable, repeatable scalping pattern. Good to know. Let's see, we got any scalps going on? Yeah, back to support and resistance in the Forex pairs. Go to crypto pairs. Oh, that's an interesting one. Maybe a breach to the upside. Oh, nice. Commodities. Any scalps going on there? Looks like we came down and, you know, tested the bottom of the range. So now on both Brent and WTI, maybe up to the top of the range. Okay, that's interesting. Little day trades there. What about, and by the way, when you, it's only oil, right? yeah, that means there's no gold, there's no silver, nothing else is happening. And then we go to the stock market. And, ooh, that's the 10-year T note. Maybe price rising to 111. That would be good. I'd love to get up above that. Like, I'd like to make this a higher high because that means yields are coming down. Yeah, yeah, I'd like yields to come down. So, anyways, that's the hourly chart on the 10-year Tino. Cool. So at least up to resistance, but I'd love to have it break out and do like a bullish pattern. That's not a bullish pattern. That's just back to resistance and thus determined as a scalp. But 83% chance in situations like this in the past that it would get up there. So, all right. A couple of days ago, I taught you how to use implied volatility at the stock market open, and we crushed it, huh? Yeah, well, every once in a while, you're going to get lucky, huh? You guys trading gold today? Okay, we're caught in the implied vol. And what time is it? Is it almost 10? It's almost 10. So the gold trading day is over. And I have taught this too in the past. Um, I like sort of the 6:30 to 7:30 period for trading gold, and then I'm usually out by 10. Now, I said all that when I learned that through experience, but not necessarily through quantitative analysis. Well, this is quantitatively on Thursdays. Okay, gold peters out around now. Okay, and that seems to be kind of what's going on. Yeah, got some news coming out. Great. We'll hear it. I have the squawk running in the background, so we'll get that. All right, Sebastian. Hey, by the way, if you guys are new to the Tradars YouTube channel, please subscribe. Please sub. Yeah. I believe it's housing, isn't it? Fox Business Gasparini. Oops. Okay. Wait for it. We're looking right here. Wait for it. See, spinning. This is where the new number will be. Will it be better than -3? Ba, 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 ba. I don't have my normal clock in front of me, so I'm not sure how long till it comes out. Is it? It should just be seconds, right? Should be out, huh? How come it didn't update?
U.S. existing sales for March for 2M versus 4.13M estimate. United States existing home sales MOM came in at 402 and below forecasts, 4.30 in March. United States existing home sales change MOM came in at 5.9%, below expectations, 3% in March.
So, anyways, so that we got the headline from the squawk, but we didn't get an update from the calendar. That's strange. What was it? 4.3?
U.S. existing sales for March for 2M.
-6 versus -3. There it is. I don't know why that didn't update. Also, normally it flashes it with a countdown, but all right, so 4 million, and instead of -3, we got -6. So nobody likes expensive mortgages, huh? Yeah, that was strange. I haven't seen that. Um, that wasn't us. That was the calendar provider. Interesting. Yeah, houses are expensive and mortgages are expensive. Yeah. Bitcoin's come down 1%. Dollar's kind of where it was earlier. S&P trying to head up to the next level. Great. Oil trying to stay with it and gold trying to stay with it. Yields on the 10-year improved as we noticed before, so that's good. 4.33. I mean, it's not awesome. It's not awesome sauce, but risk off. Dollar should be strong. And it's not. So that discorrelation is continuing now. Let's check the different time frames. Yeah, it's a mixed bag right now, huh? When you look at the different time frames. So we're analyzing the options market, hot money market, gold, yen, stock market, dollar, long-term treasuries, and volatility on 3 different time frames. And it's not painting a clear story yet, which just means there's a bit of risk. There's not an obvious direction right now in the markets on any time frame. And none of the scores are amazing. A 3 is not amazing, you know? All right, so a little bit of risk. Okay. Let's take a look at the scatter plot and see what's up. Cool. Bitcoin got hit hard. Earlier this morning at 7 a.m., the US stock market was in negative territory. We had talked about that being a probable dip if you were a buyer. So we go here, and we had Nasdaq going up. Nasdaq 3 hours ago was sitting negative, and we looked at it as, oh yeah, this is likely a dip and it'll probably rally up today. And there we are. What is that? 0.7, 0.65? All right. It's not amazing, but it's only the first 30 minutes of the open, huh? So we saw that as a dip. Dow hasn't moved yet. S&P is fine at 0.5, but we have a neutral score on that. And we have treasuries coming down, and they have come down, so that's good. Now it's only got a -3, but it's right. But price has come down 1.32%. So, or I should say yield, I'm sorry. Change in the yield, which is good. That's good. That's good. Me likey. How about just taking a look at dollar pairs? Dollar week, dollar week, dollar week, dollar week, dollar week, dollar week, dollar week. Hey, what do you think? Dollar's weak, huh? Our biggest score is euro dollar. We also have positive on Kiwi and CAD. Now, we we had already discussed that earlier today and even yesterday and the day before. So we have bullishness on Kiwi CAD, Kiwi Yen, Euro Dollar, FTSE and NASDAQ. And now those things are up. Cool. Awesome. Awesome sauce. And we have these down. So all of these things, including Aussie dollar, okay, well, actually, all of these things have positive scores. So we expect them to be up. General tone is many companies are frozen by tariff uncertainty. Okay, so these have positive scores, so they're expected to be up. These have negative scores, they're expected to be down. And look at this. Aussie dollar, even though it's got a negative score of -3, it's up today. A little bit surprising. Yeah, a little bit surprising. Maybe related to the China news. So, anyways, down as expected, up as expected, and a little bit of a surprise. Congratulations, Australia. Let's take a look at commodities currently. Gold has a positive score, oil has a positive score, platinum has a positive score, and they're all up. Copper and silver have negative scores, -2 and -1, and they are down. Ho, 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 ho. Wee. Now, remember, to get this data, we're looking at least 8 different variables. Only one of those are the technical charts. Only one of the 8 variables has to do with the chart. But we are confirming also using technicals, right? So everything there is right as rain. This market is mixed, but it's behaving quantitatively. There's no surprise on the movement. Cool. So this is how we organize our thoughts. Interest rates, jobs, inflation, productivity, technicals, seasonality, retail positioning, institutional positioning. That's how we get these scores. Very cool. What I like to do is look at seasonality and the charts, seasonality and the charts. So one is what usually is, let's call it normal. What normally happens this time of year for like NASDAQ. And then we look at the charts. Is it bullish or bearish? Is it moderately bullish or moderately bearish? It's very bullish, and it should be very bullish. Institutions are long and retail are long. Oh, but interest rates are too high. So that's how we get that score of 9. I mean, we're looking at all this stuff. Do you guys want to do some technical analysis? You want to do some pattern recognition? Yeah, me too. Let me just check what we're looking at here. Okay, all Forex pairs. Okay, all Forex pairs. And we want to look at all patterns? No, I don't want to do those scalping ones. Some reversals, maybe. And these, I'll turn those off. All right, that's good. So I'm just looking for trends and reversals. Yeah. So these haven't happened yet. It's if this happens, then you know the next leg. So if it breaks out, then you catch a pullback. Okay, I'm not excited about the Aussie Swiss franc. Rand, we want this to go down, but even though the next leg is down, the the channel is up. So I don't like that. So that's a pass. Okay. If C gets to D, then it'll have formed a likely reversal pattern. So it's just looking at this, I'm assuming on a higher time frame, like a 4 hour or daily, it's more bearish. So think of this almost like a three-wave correction if you're an Elliott wave trader, and that there was some down, a three-wave correction with some further down in the future. Okay, not today. In particular, when Aussie's strong, I don't know. So I'll pass on that. Okay, three drive. This is setting up a plausible reversal as well, but it has to go, you know, it has to go to D, and then you'd expect the move from D to E to be lower than C, which then sets up a lower high, almost like waiting for head and shoulders to form. Yeah, I'm not a big fan of that either, so I'll pass on that. All right, Aussie yen up on a 15-minute chart.
US dollar sees US economic data starting to get distorted.
Fed Waller, general tone is many companies are frozen by tariff uncertainty.
US existing sales for March for 2M versus 4.13M estimate. United States existing home sales MOM came in at 402 and below forecasts, 4.30 in March. United States existing home sales change MOM came in at 5.9%, below expectations, 3% in March.
Fox Business Gasparino, near agreement in principle on trade with India. US dollar Canadian dollar lower but holds a 100-hour MA.
US dollar slips as stocks dip, Scotiabank.
Canadian dollar lags peers as markets ponder US trade policy. Scotiabank.
Mixed sentiment in global markets.
So, twice an hour, the Squawk Box gives you an update on the most recent headlines that have come out in the last few minutes. So it must be 10:15, huh? So it's not too intrusive. So the Squawk Box will read you a headline when it comes out, and then at 15 and 45 on the hour, it gives you little updates. Now, I recently sat on a beach in the Caribbean listening to the Squawk Box, and I'm telling you, epically good. Epically good. If you're a professional trader and investor, just to sit there and be updated while you're watching the waves, oh my God. Everyone else is listening to audiobooks or something, right? They're listening to podcasts. I'm listening to the live news as it's streaming, but it's very quiet, right? Only every few minutes, something interesting happens and you get updated and it just whispers in your ear. Super good experience. All right, so what else going on here? Kiwi yen 15-minute chart down. See, all of these charts, I mean, look at they're messy. So maybe a reversal coming in Kiwi yen. Pound yen is down with the leg down. Okay, that's a maybe. But it's on a 15-minute chart. I mean, it's so small time frame, but it's plausible from the top to the bottom. That would make sense. That's the pattern. And I'm okay with that. Pound has been weak recently. Yen has been strong recently. I'm okay with that. When I look at like Kiwi yen on the 15-minute chart here, I'd see sort of non-directional. On a higher time frame, it's suggesting more likely that this 15-minute chart breaks down. So we get below 85, and if so, okay, we get down and then it comes up, okay, and maybe so the lower low sets up a higher high. See, ugh. Yeah, seems like maybe later today or a tomorrow type trade, huh? Down today, up tomorrow. What do you guys think of that? USD Mexican peso, that looks pretty good. It's a down channel, so we're bearish. Plus, I'm only a bear on peso. I mean, USD peso. And so we have a down channel with a down leg. So, yeah, we're selling those rips, and that's okay. Again, only a 15-minute chart, but that's a giant, big, fat maybe for today. Euro yen hourly, it's suggesting so the triangle is non-directional, but the way I like this is if it breaks down, because remember, this pattern hasn't happened yet, but we have challenged the support line. So if it does break down, I would look to sell a lower high at 162 to 162.20, and then this pattern will go away and it'll turn into a channel, a down channel. USD yen, up to down, to up to down. So later, okay, again, later today or tomorrow. USD Swissy. Yeah, none of these are exciting. Ooh, that's interesting though. Look at that on this 30-minute chart. A head and shoulders. Another reversal, huh? So that Aussie strength goes away, maybe? Yeah. So it recognized 100% pullback. You got a heads up 2 hours ago when we tested the left shoulder, and now it'd be down. But of course, that's just saying the next leg is down, but most likely down through support and then lower high, lower low again. So this could be today and tomorrow.
Pancake Swap reports best quarter ever in trade volume. What it means for cake price. Feds Waller, rate cuts could come from rising unemployment. Silver price forecast. Silver US dollar corrects as White House softens stance on US China trade relations. US weekly jobless claims inch up to 222,000. ECB's Holtzman. Rate cut must wait for more tariff certainty. Iran proposes talks with European powers as US nuclear negotiations proceed.
Now you're like, Wayne, I thought you said the update was every 15 and 45. Why did they do it now? No, no, no. All that stuff was posted in the last couple of minutes. 6 headlines were posted on various websites around the internet. in the last 2 minutes. And you were updated. That's pretty sweet, right? Another 3 drive on an hour, suggesting up later. Ugh, this is messy. Messy. So we have 2 more pages of this stuff. Yeah. Let's take a look at the stock indices. Okay. That is nice for S&P. That's nice for NASI. Okay. And again, that's a great opportunity on the S&P higher time frame. FTSE's down, and it looks like it'll continue down. But what we're looking for, because remember, we're bullish fundamentally. It's right when you go to the fundamental section, it's right on the dashboard. Look for this to be long. So it's bearish on a 15-minute chart. Oh, so Wayne, it's wrong. It's not wrong. But what you want to look for is, what if FTSE suddenly starts producing bullish patterns like a higher high? Then you have permission to engage on the next higher low. And now your technicals line up with your fundamentals, and that is right as rain. Looks like all the stock indices, well, like here's another one an hour ago, showed some small bullishness. So here we are looking at FTSE on the 15, and it shows down, but we want it to go up. When we look at the FTSE, the same time frame, same index, but it's also producing a Gartley pattern, a harmonic pattern, much more complicated, but it says the same thing, down. Okay. And of course, you got this 2 hours ago. We were probably getting ready to trade the market open, right? Yeah. Nikkei, slightly bullish. Probably wrong time of day to trade it. DAX, okay, very bullish, but we need to wait for this leg to come down to support. So the arrow is pointing down. We don't want that. We want the arrow pointing up. So when we get to support, or if we get to support on this, German stock market 1 hour chart, we want up. So where the arrow is pointing is probably the next opportunity. Again, it's just a pattern. It's not predictive. It's just, if you want to buy in an up channel, you don't buy it at the high, you'll buy it at support. And that's where support is. Daily, S&P has been consolidating, but a break up changes it from consolidation to bullish breakout. So you would start buying dips if that occurred. And it looks like maybe today is one of those scenarios, huh? If you're having trouble seeing, you can zoom in like this. Okay. And you can see the pattern was thrown out, or not thrown, produced when traders recognized that the resistance line had been challenged. So now, if it goes up to here, the way would behave is I would start to buy dips, and maybe along the line of this. So this might create like this red line would extend into the future, and then you'd probably do a parallel line off this top. So that would produce, okay, not a triangle, but now a bullish channel up. Cool. And that's when I want to engage. This is just telling me that might be happening.
Could gold hit $4,000 in 2025? Octobroker explores the upside scenario.
Okay, so that might be a trade later today, more likely tomorrow. You want to do some gold? I'll do some gold. In fact, if you only want gold, that's easy. Check this out. You just go to commodities, turn off Brent, turn off WTI. How about gold and silver? So we're only looking at the metals. And here they are. And there's a lot going on right now on all the different time frames. So we're looking at the 15, the 30, the 60, the hourly, the 4 hour, and the daily. And we're looking for only consolidation, or I guess we'll call it reversal patterns and trending patterns. So gold on the 60-minute, okay, it's a pennant. And I guess if you're going to use this more like a triangle, I'd say non-directional breakout. So then you'd catch the pullback. So you could scalp it down or let it fall, let it rise, and then swing it down. That's happening on the right. It's happening on multiple time frames. So this tip is right here. And then if you go further out, it's very similar. Silver 30-minute chart up, which is strange, isn't it? A down and then an up, okay, in a scenario where gold prices seem heavy. So let's go further out into the time frame, okay? 30-minute chart, silver looks down as the other pattern, the 3 drive suggests, but then the other pattern suggests once it's made a lower low, that it has a greater chance of then not just going back to resistance, but maybe actually higher. So the next down produces the next higher high on a higher time frame. Okay. Let's go higher time frames here. Here's gold. If gold starts heading up from this $3,275 range where we kind of are now, then the next leg could be a higher high to 3,566. And then, yeah, and then you got to watch the bigger Fibonacci pullback. So, for example, if it pulls back to C, which is 100%, then it would go up to B, and now you have yourself a head and shoulders. So we're vulnerable to that, even if it makes a higher high. Good to know. Yeah, good to know. So for whatever reason, the pattern is predicting one more rally and the potential for lots of profit taking. Okay, Lucky? Okay. Yeah. And here's even further out now. Remember, silver said down and up? Well, now it's clear as day on a 4 hour chart. Yeah, down, breakout, pullback, catch the roll reversal long and gone off the moving average. Yeah, that's what these were suggesting. A new lower low that then produces a higher high. And we see that confirmed here. Lower low to then a high on inside of this little range. So if you're long-term long, you should be looking for dips. Okay. Even on the highest time frame, even if it dips down. Yeah. But right now, it looks like here's the consolidation. This is daily candles. Here's that consolidation that we just looked at. So it's not that it should fall and go up. It's if it does, there's still upward pressure on the bigger picture here. But if you kind of zoom in and you just look at here's that little consolidation zone and up. Okay. Yeah, up. This is an up. So even if it falls, it's an up. It could fall for a week and still be an up. But right now, these other patterns say, yeah, well, the up is probably now, both on the medium and short term. And if, of course, that's true, hopefully we don't have to go through this mess and just we're going to breach A and go higher to, you know, the next week. So let's say in the next 7 days we get to 37 from 33. Well, that'd be sweet, wouldn't it? Okay. So remember, none of this is predictive. It's looking at patterns, the top 20 patterns, and I isolated that down to just trending and reversal patterns. It's only looking for those that might be forming.
Pound sterling recovers against US dollar despite hopes on US China trade deal.
United States EIA natural gas storage change above expectations, 69B, in April the 18th, actual, 88B. U.S. durable goods orders spike much more than expected as aircraft demand soars. ECB's Holtzman. Rate cuts must wait for more tariff certainty. Cool. All right. So we just got updated on oil inventories. That's cool. Someone from the ECB was talking. We were updated about that. Not only did we get the headline numbers of durable goods, now we're being updated on why the durable good orders were low. In particular, the subcomponents like airplane orders. Isn't that cool? All while we're just sitting here staring at our charts. We never have to take our eyes off the charts, but we're always updated on the news flow. Yeah, a service like that, some of them cost $300 a month. So I hope you use the one I'm streaming free on this YouTube channel. Yeah. I'll be updating some of the information about our rebate program. One of the cool new things that we're doing in the rebate program is that let's say we give you 10,000 bucks, an equity boost. So that's kind of our prop fund, right? Great. So now you get this equity boost and it's over there. So now you're a little bit bigger of a player. But at the same time, at the end of every day, we look at your trades. So let's say you made 3 or 4 trades. We take some of that from your equity, which is like theoretical money, right? Equity. And we convert it to real money and move it over to your account. So the great example is, let's say you had a $10,000 equity boost at the end of one day. Let's say you get $1 rebate on your 3 or 4 trades, right? From your spread takes $1. So now your equity boost is only $9,999, but we take that $1 and put it into your account, which is real. It is in your account and you can withdraw it. It's just like we want your spreads to be cheap. We're giving some of that spread back to you. And then at the end of the month, if you've traded enough, I also send you via PayPal real cash. So, you might, let's say in a month, I don't know, I'll make up a number. Let's say you get $20 back from the cost of your trading through the spreads. You get, let's say, 20 bucks back there. However, I might send you 50 or $100 or more from PayPal. The idea is I want traders to be free. But how cool is that? So every day you get real cash put into your account, and then at the end of the month, I PayPal you real cash. Haha. Whoa, so your spreads narrow and you get money back in the form of cash. Oh my God. So that transfer of equity boost into actual cash, that's new. And so I have to update everything and update the terms and update the website. But just so you know, that's a done deal. Now I just have to update the site. Oh my God, right? You guys okay with cheaper spreads? Like, oh my gosh, right? You're wait, what? You're gonna lower my spreads and give me a cash rebate at the end of the month so that trade ours is free or at least cheaper? Yep. I think for most of you guys, it'll be at least half price. At least half price. So you have all of this every day, 5 hours of performance coaching every day, and it's either cheap or free. So you'll like that if you're a scalper, huh? To have a cheaper spread. Yeah, if you're doing 10 scalps a day, that makes a big difference, right? Makes a big difference. Every little bit counts. All right, so we're in an odd time of the day. Let's go check implied vol and see what normally cools off on Thursdays. Oops, I want this one. So this tells you to look at this and not at that. So all these things are pretty good. I don't think you guys are trading stocks here, so why don't we turn stocks off? It's just too crowded. Save. And all those are good. So it's still a hot market. Yeah, 2 pages of awesome sauce. All right. Everything's still good. It should be cooling off pretty soon, though. Nope, but it's all good. So we still got some vol on things like Euro, Kiwi. Well, as these things cool off, and they will, you can see here that it will, it then you only really want to look at things that are in the high implied volatility section. So if you are a bull in Euro Swissy, what this is saying is this area around the 1 hour implied low, which you can see we touched, has you going up to the 4 hour implied high, which is here. Or if you're going to hold it for a couple of days, you know, significantly higher, 94 and a half. Tomorrow on this pair, though, we lose volume pretty quickly. So really, we'd be lucky to get to the 4 hour high. Oops. Yeah. So this kind of look, if you're a bear on Bitcoin, yeah, the highest high you could expect is like 93.8. And if you're a bear, 93.8 can get us down to 89.8 tomorrow. Although we're going to lose again by Friday, we're going to lose volume and volatility on this. And we're about to lose in the next, what, 3, 4 hours. So once London closes, you can see we lose quite a bit of bumps at the New York close, and then right, the implied volatility narrows even more. Okay, look at that. That's New Yorkers coming back after lunch. Implied vol spikes at 1. Yeah, that's really cool. Get your trades, go to lunch, come back, get your next trades. Yeah, it's kind of interesting, huh? And that's specifically Bitcoin on Thursdays. So when you use this right, it's actually showing you, based on implied volatility, what typically happens this time of day on this day of the week, where to put your stops. So if you were going to sell near the 1 hour high, you could put your stop above the 4 hour or the daily implied high, because it's not likely to go that high if you are indeed correct on being bearish. Or the other way, if you bought this zone because you're a bull and you saw this as a short term dip, you would put your stop below the 4 hour, or you'd put your stop below the daily, depending on whether it's a day trade or a swing trade. And based on what has happened in the past, this day of the week, this time of day, it would be improbable. U.S. names lead for technical talks with Iran, Politico reports.
Pound sterling recovers against US dollar despite hopes on US China trade deal.
United States EIA natural gas storage change above expectations, 69B, in April the 18th, actual, 88B. U.S. durable goods orders spike much more than expected as aircraft demand soars.
Gold prices rise as safe haven demand returns.
ECB's Holtzman. Rate cuts must wait for more tariff certainty.
Could gold hit $4,000 in 2025? Opta Broker explores the upside scenario.
Pancake Swap reports best quarter ever in trade volume. What it means for cake pricing. Fed's Waller. Rate cuts could come from rising unemployment.
Silver price forecast. Silver US dollar corrects as White House softens stance on US China trade relations.
That shows the bearishness, right? Yeah, in silver, right? And we saw it in the technical patterns, short term short, but potentially still a long term long. So we can get that data from here in the sentiment radar and see if uh, over the next couple of days, if sentiment towards silver falls, huh? So in the last 7 days, Tradars has read 33 articles on 2 websites, most of them from FX Street, the others from FX Empire. So we read the 33 articles and they're neutral. Isn't that interesting? The sum of all 33 articles in the last 7 days are not positive or negative on silver. How has this changed? Well, we were very bullish on silver way back at the end of March. Then we dropped into April and it actually went negative. And now we've been neutral now for a couple of weeks. So what you want to look for is fundamentally bullishness on silver and maybe even negativity as far as how the market feels about silver. Well, how it feels will change if it's suddenly, on a headline, right? And so suddenly, let's say the fundamentals eventually are likely to win this battle. And then after it starts going up, guess what? After the fact, the media starts writing about it. So I almost look at this as, somewhat of a contrarian where we could have, let's say we have a really good score on silver, but neutrality in the market, I can say, well, there's my opportunity to buy something that, let's say, the charts show as potentially bullish. I can get in on that earlier, and then if it does turn bullish, you'll see really good things being written about silver, and then the dum-dums start buying it. Not because they analyzed it, not because of the technicals, not because of the fundamentals, no, but because they read some positive articles on FX Street, and they're like, I guess I'm supposed to buy silver now. Well, you don't want to be that person. Okay? You're buying silver because Blue Horseshoe loves silver. No, dude, seriously? Oh, you heard a talking head on CNBC say something good about silver? That's not how a pro works, is it? Yeah. So anyway, so you can check silver and see, do we agree based on macroeconomics or quantitative analysis? Do we agree with silver neutrality? Well, let's take a look. Okay. We can go to commodities. That's oil. Let's get off oil. Let's go to silver. And we are neutral. So we agree with the market. Technically, it's up. And even here, it's usually pretty good. So seasonality gets a 1. The technical trend went from a 1 to a 2, but there's just not a lot fundamentally going for it. So it's really headline driven. But you know what? I think I'd still be okay with buying dips in silver because, like I said earlier, I like to match up seasonality. This should be going up this time of year, and technically it is. So I can still buy dips. Now, the market is looking at all the fundamentals and they're like inconclusive, but it should go up and it is going up. So I can override that if I wanted to and say, well,
Tech stocks lead the charge. Strong gains across sectors highlight market optimism.
you can have sort of a conservative bullishness. Does that make sense, everyone? 75% of of institutional investors are long silver. Yeah. Okay. Not week over week, but in general. I know I got to change these colors. So week over week, the bulls in silver have sold off some of their long positions, but they're still long, net long, very net long. Anybody got questions? Okay. So we're bullish on this asset and it has gone up. Good. Let me say that again. We're bullish on this asset quantitatively and it is going up. Nice. And now I would connect some of these dots. Hmm? Yeah. Yeah. Platform's a little slow today. Come on, Ray. There it is. So the closer we are to the apex, the more reliable the break. Now, I'm going to take this up a notch and also throw that in there. Cool. All right. Yeah, I had Bitcoin going up back to 100. This is why it's good to back out to higher time frames. And we're stuck on resistance now, huh? You see this? So maybe some vulnerability back to this level, which is the May central pivot point. Not that if it will, but even if it dropped, I'd probably buy it at 87 and a half. And then the top in May is essentially 108, which is watching that old floor, which is not the ceiling for the US dollar Swiss franc. Okay, which gets us back to the all time high. The only thing I can predict is if you ask me, well, what if it makes a higher high? Then that gets us to 120. It's way too early to make that prediction. Hey, did you click the thumbs up button? Did you tell YouTube this was not crap? I know it's not a very high bar, but I hope none of this was crap. So again, sorry that I'm not on Forex.Today. I had a power outage. I started that stream, then I had this power outage, so then the stream ended. And then my PC didn't want to come back on. It didn't like the fact that it was shut off incorrectly, and then it had to do a bunch of tests, and then it was slow as molasses, and had to reboot everything. So I'm like, I'll just go on my laptop. Now, if you were a bear on Bitcoin, this would be a great place to start looking for bearishness. Now, I said even if as a bull, I think it could come down and then go up, but a bear might just say, well, we're at the May M3 and the target is to take it back down to these lines that I drew. Now, these lines go back from previous analysis where that was a buying opportunity for Bitcoin at around 75. Hey, now we're at 90 something. That's a nice little move. So is it back down? I don't know. You have to be a bear. But if you were a bear, that would be a place of interest. That's why I think even bulls would expect some down. And then bulls would buy around, let's say, 87 to 84 would be the up to 100. So buy it at 85, take it up to 100 and change. Okay. Oh, yeah. And again, please subscribe to this channel. There's only 500 subscribers. I need to get it over 1,000. This is where I run the Squawk Box 24 hours a day. So at least you can use a Squawk Box for free. So this is what I used to set up the buy on the Dow. Okay. Now, most of you guys know if you're part of Forex.Today that I bought it right there on vacation on a Sunday in the Caribbean on the beach, smoking a cigar, having a cocktail, got my laptop out. Asia opens, it drops to my line, and I bought it. Yeah. It went all the way up to the weekly 5 EMA, and I jammed my stop. And on this red candle, I got knocked out above the pivot point. Yeah. One mini lot produced $3,000 while I'm sitting on the beach. One mini lot. Went up that same day. Chow. So somewhere around here I got out for profit. United States Kansas Fed manufacturing activity down to 5 in April from previous 1. U.S. existing home sales plunged more than expected in March.
Trump. Boeing should default on China for not taking delivery of planes. Morgan Stanley Infra Partners eyes $2 billion Permian pipeline sale, sources say.
So those headlines just came out. Just like that. Now you've been updated. Trump just said something in the last couple of minutes. Boeing should send a notice of default to China. Cool. Neat. So I would like this to go up. Okay. I'll show you what I'm eyeballing. That peak and that peak and that bottom, that gap. So we filled the gap. And now when you have a gap like that, the job is to let the gap fill and then continue mission. So at least to this old high, but you know, I own this in my endowment and I'm long forever. Yeah. The last time I looked, which was a few days ago, my endowments had half the volatility of the S&P 500, and yet we were beating the S&P 500 by 7.5% over the last 6 months. Nice. Jiminy Cricket beating it with less volatility. That made me super happy as a portfolio manager, in particular for charitable endowments. That made me very happy. Doing the job. I'm thinking about expanding my endowments and offer it as a safe haven for retirees. Yeah. So, for example, if things continued as they have been for the last year and a half, if you retired with $1 million and you put it into my endowment portfolio, so I run your retirement account just like I run the charitable endowments, same exact thing, you would have less volatility, but you'd also earn about 120,000 a year that you can live on from your $1 million and never touch your $1 million. So 8 years later, you've lived on $1 million of income, and guess what? You still have your $1 million. Dude, that makes me super happy. And right now, in America, the number is 1,250,000 is what people retire on. Problem is they own stocks, and to live on it, you have to sell your stocks. So the older you get, the less you have. And of course, the scariest thing is, what if you live longer than your money can survive? Well, that's the whole idea of my endowment. The money should last forever. You should live a very comfortable life, have the income to pay for it. It's consistent, so you can budget on it. And when you die, you leave your money to your heirs or to charity. You still have your life savings when you die. Your entire life savings is still in your account when you die at an old age. What a killer vision that is. Well, I'm actually doing it right now, which is great. Makes me very happy. So I thought I could get licensed and registered as an advisor so that I can give you like a personal endowment. Kansas City Fed Manufacturing Index for April 5 versus one last month. It works even better for those saving for retirement. If you're like, man, I don't have $1 million. Oh, what? If you're young enough, if you're 30 or 40 or 50, we can certainly try to get you there, because what you do is, instead of spending the income, you reinvest the income. So now you're growing at a minimum of 12% a year, which means your money is doubling about every 6 years. So if you saved, let's say 50 grand one year, six years later, it's 100 grand. Just that 1 year. And then another 6 years later, the 100 turns into 200. 6 years after that, the 2 years, right? It goes from, all right, 200 to 400. All of a sudden, you can see from saving 50 grand 1 year. So if you only have 20 years left, or something like that, 50 grand turns into 400 grand. And then you turn the reinvesting off. So 400 grand would produce, at least 40, maybe 50,000 a year in income from the 50,000 a year from the 50,000 you invested. Now you have 50,000 a year every year. And when you die, you have 400K. But what if you put in 50 grand every year, or 10 grand every year? Yeah, it's exponential. It's incredible if you're doubling every 6 years. Huh? So if you can only save $1,000 a month, you're going to be a millionaire if you're still fairly young. Let's say you're 40 and you're going to retire in 25 years. $1,000 a month probably make you a millionaire. Now you hit that 1.25. Yeah, and you can live on 10 grand a month plus whatever the government gives you. Hey, that's not a bad deal. It's a lot better than what the government's going to give you. So your money works for you while you're too old to work. How killer is that? because that makes you wealthy. Rich people make a lot of money. Wealthy people don't work and they make a lot of money. So, anyways, this no diggity no dow looks great. Oh, wonderful. Just gorgeous. So that's your day trade right there, huh? Remember, this is the support I drew, and then up, and then a higher low, trap and break, you know? This is all around the New York Open. You can buy it there, or you can buy it there. Cool. You guys are quiet. Are you okay? Should I let me know if I should pull the plug if Kansas City Fed Manufacturing Index for April 5 versus one last month. United States Kansas Fed manufacturing activity down to 5 in April from previous 1. U.S. existing home sales plunged more than expected in March.
Trump. Boeing should default on China for not taking delivery of planes. Morgan Stanley Infra Partners eyes $2 billion Permian pipeline sale, sources say.
Watching that old floor, which is not a ceiling for the U.S. dollar Swiss franc.
Tech stocks lead the charge. Strong gains across sectors highlight market optimism.
U.S. names lead for technical talks with Iran, Politico reports.
Pound sterling recovers against U.S. dollar despite hopes on U.S.-China trade deal.
United States EIA natural gas storage change above expectations, 69B, in April the 18th, actual, 88B. Okay, well, I guess that's it then. Have a wonderful trading day. I'll see you at Forex. No, I'll see you at FX Street tomorrow. Tomorrow's Friday. If you are a member of Traders.com, today at 4 p.m., I'm doing our swing trading group where we plan all of next week. We plan today at 4. Yeah. We plan next week this afternoon. Cool. And then tomorrow I'll be at FX Street for Off the Charts with Wayne McDonald. Please subscribe. Please like. Please leave a comment. I'm going to put it back to I'm going to put this back to the squawk. So if you want to stay and just use the squawk for free, I'm totally cool with that. In fact, I've already spent all the money, so you might as well use it. Okay. So I'm going to leave the stream um, running. Okay. So let's see if this works. There we go. There's the stream. And I guess I should probably kill the mic. So have a wonderful trading day. I'll leave the Squawk Box running. It's yours to use for free. Cheers.